Markets have taken a leg lower, especially tech, over the last few weeks since Jackson Hole. You guys have nearly $40 billion in dry powder. How are you seeing the market opportunity right now, and have valuations come down enough?
Yeah, I think we've seen in the public markets this reset in terms of valuations. And I think the big pivot, and you're starting to hear it in the conference, it sounds like as well, is the move from growth at all costs to actually need to focus on profitability. We're definitely seeing that play through in the private markets as well. I'd say one theme we're seeing is a lot of founders and management teams that have built their businesses over the past decade in this inexorable up environment are having to pivot to focus on profitability and looking for help from investors like us in doing so.
Yeah, and we're hearing a lot about that. I mean, we have Evan Spiegel on. They just did that restructuring. I'm curious if you're looking at growth opportunities right now. Which sectors or areas do you think have the most potential upside?
Yeah, I think, we invest in a lot of consumer-oriented tech companies during the pandemic that saw a lot of big tailwinds. So think of Calm and direct-to-consumer, the mindfulness and meditation app, Ipsy and e-commerce. We had a broadband play and just everybody at home and use of bandwidth. And we have a lot of investments in entertainment. So think of CAA, DirecTV, entertainment partners that really benefited from people staying at home and streaming. I think post-pandemic, you're seeing a reset in terms of growth rates because a lot of that demand got pulled forward. But these are still really healthy end markets and sectors that we believe in long term. I think another kind of deal type we're seeing in this environment is trying to be not correlated to the market. And what I mean by that is doing problem-solving deals. So one of the big deals we did last year was a carve-out in partnership with AT&T of DirecTV. Super complicated deal, had been totally integrated within AT&T. I think we had over 200 transition services agreements. And that's just not something, any investor can take on. And so looking for those non-correlated deal types.
Yeah, I mean, I want to get your thoughts on more of the tech market right now, but you just mentioned the media space. Obviously, there's been so much going on right now, concerns about a contraction in the streaming market with those Netflix numbers down. What is the outlook that you have in terms of the opportunity? Do you think that we're going to see everyone shift over to these ad-supported services?
Yeah, certainly you're going to see a part of the population focus on lower expensive, particularly in this economic environment, streaming alternatives. That being said, notwithstanding the news at Netflix and Warner Brothers Discovery needing to focus on cost out at the moment, content spend is still it's really high. While the second derivative, while that growth rate may be slowing, relative to any historical benchmark, people are still spending a ton on content production. We're seeing that flow through our own portfolio.
And so we always say it's like the end of Reservoir Dogs where nobody wants to put the gun down, right? Do you expect somebody to put the gun down in terms of content spend?
I'll tell you, we're not seeing it yet. While the growth rates may slow, we're still in this content war that we're seeing play through in terms of spend.
So then how are you looking at your own investments? Like I mentioned, you got $40 billion in dry powder. Are you looking to put that to work right now? Do you believe the market's bottomed earlier this year, or is there more to go?
Unfortunately, I don't have a crystal ball for the public markets, but I'll tell you in the private markets, you generally see about a 6 to 9 month lag. And I'd say some of the deal types we're seeing now are companies coming to us because they know the IPO market's shut.
Yeah.
They still need primary, some cases secondary financing. We're a great source of liquidity. There's other companies that have just been built with too high of a burn rate. They just need to raise capital. And I think the other interesting thing is, public markets can reset, on a daily, by the minute basis. And so you get to a price that settles out. In the private markets, there's still a need for liquidity. And so we're starting to see a lot of secondary sales of big private tech companies at meaningful discounts to the last private round.
And how do you think that's going to continue? I mean, right now we're seeing this disconnect. We're seeing down rounds, but there is still this inflation of the private market versus the public market. And the IPO window hasn't really opened up yet.
Yeah, I think, look, there's always that lag that I described, usually 6 to 9 months. And frankly, for companies that raised in 2021, their VCs are telling them, use that capital, do not raise because you're not going to like the outcome. That being said, there's still, when you think of the, over 1,000 private unicorns, just in that huge denominator and huge TAM, there's a lot of opportunities for us and others.